Welcome to this week's edition of the Construction CPA's Coffee Cafe. I am the Construction CPA, Lisa Raish. We are dropping the hammer on cash flow problems so you can build things that matter. This week's topic is how to deduct business travel the right way. So, this is a really interesting topic and is definitely one we see clients want to push the envelope on sometimes. But, what we're going to do today is I do want to go over um, which ones are deductible, the best way to document them, because that's important too. Because we don't want to get up on any of the taxing authorities' radars. So that's a big thing. Um, and then also, I want you to be able to ensure that you are in fact deducting all the travel that you can, so you can maximize your tax deduction. So, what are we going to kind of go through today, right? Let's get you the right business tax deductions so that you can lower your taxable income, maximize your savings. We don't want you to make the same mistakes that a lot of other people make, which can potentially get you on the radar of one of the tax authorities. So, what are the kind of do's and don'ts, or let's call them common mistakes that we can look to avoid? And again, utilize another ordinary and necessary business expense in order to reduce your overall taxable income. So, what actually qualifies as business travel? So, as I just said, travel must be ordinary, necessary, and primarily for business. So, what are some of the things that may, in fact, qualify for your business travel? So, you're going out to meet a client or you're going out to meet a customer. You're attending a conference or you're going to a trade show. Trade shows are actually very common, especially with the clients we work with in construction. Um, are you going out to a site visit? Are you actually going out to inspect a property that you own that's away from where you're actually headquartered? Are you exploring expanding your business into another area, and therefore you are going to explore new areas or new locales where you may want to expand or create a new office? So you're doing a business expansion trip. Many of us go out on an annual basis and do trainings. We do workshops or continuing education. And then the last is if you have any investors in your business, maybe you're going out to an investors meeting or you're going out to network with other people that will become future investments or future projects for you or that kind of a thing. So those are all qualifying reasons for you to have business travel. What does not qualify as business travel? Personal vacations do not qualify with just a minor business, little bit of business activity in that travel. And then the commuting from your home to your regular place of business, that does not qualify as travel. So let's dig a little bit deeper into what actually does qualify as travel expenses and what you actually can deduct. So you can deduct transportation costs, you can deduct lodging and accommodations, meals and entertainment, conferences and event fees, communication or telephone and internet expenses. There'll be some miscellaneous ones that we can talk about, and then we'll also review travel for your employees. Okay, so let's talk a little bit more about the first one, transportation, right? So that's going to be your airfare. Some people may take a train, right? Those types of things. Are you renting a car? Are you taking taxis where you are? Are you Ubering around? Are you on Lyft? Those types of things. So again, those are transportation costs. If you are actually driving your own personal vehicle, you can take the IRS's mileage rate for the year. And so that's going to vary year to year. As an example, the 24 mileage rate was 67 cents a mile. The 2025's rate is 70 cents a mile. So if you're outside of those periods, let's look, or you actually do want to look, because I have seen in prior years that in the middle of the year, the IRS could in fact increase or decrease the mileage rate. So you do want to make sure that you are utilizing the correct rate. So you do want to go back and check regularly that you in fact do have the rate that is appropriate for that time frame. For example, 2 or 3 years ago, there was an adjustment made at June 30. So the first half of the year was one rate. The second half of the year was another. So you'd want to split your travel over that period so that you are accounting for your travel according to what the actual rate was for that period in time. So your lodgings, your accommodations, what is that? That's that hotel stay, right? You're traveling somewhere to a conference, you're traveling to a trade show, where you're staying at that hotel as long as the trip is primarily for a business. And that is going to be the thing that you're going to want to consider through all the other expenses as well when we're thinking about whether it's truly deductible. Your trip has to be primarily for a business. And so we say hotel stay. That can, in fact, also mean, say, an Airbnb or a VRBO, someplace that you've rented locally. In some cases, it's probably financially more fiscally responsible. If you are taking yourself and a couple of team members, for example, to a trade show, it may actually make more sense financially to rent a house versus each of you staying in a hotel room. So yes, you can deduct your Airbnb or VRBO or any one of the other types of short-term lodging sites that are out there. For is considered considered your accommodation expense. Now, what if you mix your business and your personal? You can only deduct the portion that pertains to your business. So we're going to talk about this in a little bit in farther down, but if you are, in fact, we see it all the time. There's a very large construction trade show in Las Vegas every year. So what if you are getting there early and for personal reasons, or you're staying after the show for personal reasons, right? What portion of that is actually deductible to you? And we'll go over that in just a minute. We'll talk about that in a little bit more detail. Meals and entertainment. So meals is a very big thing, and we want to make sure that you understand your meals related to your business travel is only 50% deductible. It is not 100% deductible. It is only 50% deductible. So what qualifies, right? So the meals are going to be very comparable to any other meal deduction. It needs to be, possibly with a client or with your employees or with business associates, or again, if you're traveling alone to a trade show, your meal, but it's only 50% deductible. It's not 100% just because you are away from home. That is one of the things that can sometimes be confused. People automatically assume because a person's away from home that it's 100%. That is actually incorrect. As always, keep your receipts, because on those receipts, you need to note the following: who you were with, what you were doing, where you were, when you were there, and why you were there. So again, like anything else, who, what, where, when, and why needs to be documented on that receipt. And you need to retain the original receipt. Your credit card statement or your debit card statement is not sufficient documentation from an audit perspective, as it's not proper, it's not sufficient, right? You need that actual receipt, that actual hotel receipt that you got when you left, when you checked out of the hotel. That is your documentation, not the line item that's on the credit card that shows that amount. So again, keep that in mind. It's your responsibility to retain your records and retain those records with the proper information on them. What else is deductible? Conferences and event fees. I personally go to a conference every year, so that particular conference is deductible. So if there's a fee to register for it, or if there are fees to register for workshops or seminars or just an overall industry conference, again, that's fully deductible to you. You can deduct educational expenses related to business. So are you going to an educational seminar, or are you going to an educational event that's actually going to help you get, say, an additional certification, right? Maybe you have to travel to a location to attend a 3-4 day educational seminar, which will help you get a specific certification at the end. Again, you are allowed to deduct that because it's ordinary and necessary related to maintaining your business, especially for something, for example, in my industry, continuing education is actually a requirement. So if there are things to maintain our education as well as further it or help with additional certifications, again, that is deductible. So your communication or your telephone and your internet expenses, are you paying for Wi-Fi on the plane? That's a deductible expense for you, right? Are you using any other kind of softwares when you travel? Are you using, a VPN to try to kind of mask yourself on the internet for security purposes? So that, again, there's always issues with someone trying to hack your information from somewhere, right? Are you using these types of softwares when you travel? So again, those are ordinary and necessary business expenses related to your travel. Are you traveling abroad? Maybe you're paying international fees when you travel abroad because you need to ensure that you are able to use your cell phone, and your cell phone needs to retain its connection to the internet to be able to get emails, etc. So again, that's all deductible, and that's all 100% deductible as travel expenses. So there are going to be miscellaneous expenses you come across. If you're flying, you're clearly going to pay a bag fee for one of the airlines. I think almost all of them charge you now for a bag. Those are the types of things. Those are going to be miscellaneous expenses you'll come across. Maybe you are going to tip the staff at the hotel because you're there for a week. So the cleaning staff who's caring for your room, maybe you're tipping them. Those are the kinds of miscellaneous things that are deductible travel expenses. So they're not as a big, large scale expense as some of the other ones that we've discussed, but those are some of the things that you're going to come across. The other thing is maybe you have employees traveling for you. So can you deduct the travel expenses for your employees? Yes, you can. All of the rules and all the things that we just discussed about what you can and can't deduct, what qualifies ordinary and necessary, etc. You want to just apply that to your team's travel as well. And again, those are going to be deductible to you as a business owner. So one of the things that we get a lot of, and clients want to get or make their business travel, they want to combine it with their personal. So what is deductible? Can you deduct it? How much of it can you deduct, right? So what happens if, you have a trip that's partially business and partially personal, right? So, what can you do? You stay an extra weekend after a conference. Is this allowed? You can stay, but the primary purpose of your travel has to be for business. So again, we talked a little bit about my little example, Las Vegas, right? How many of you have gone to a conference in Las Vegas? Tends to be one of those places. A lot of the conferences they look to get as many attendees, so they bring it to some place that they know people will come and they will visit. So what if you decide to stay after the conference? Yes, you can stay after the conference, but for a weekend, but all of your expenses, all your meals, anything you're doing on that weekend after the conference is not deductible because that is a personal trip for you, right? That is not a business related trip. Or, I'm going to or a big one, we're going to take the kids to Orlando for the week. I'm going to go off to Tampa for a day and see a client, or maybe 2 days, and it's a business trip. Well, no, the trip was actually not primarily business, it's primarily personal. So you need to make sure that you actually allocate your expenses between the business and the personal. And then if you are taking your family on those trips, your family staying in the hotel is not deductible as a business expense. The kids' trips to Disney World, again, is not deductible as a business expense. So you have to have, number one, the trip has to be primarily business. But when you start to do personal things in that trip, those personal things are not deductible to you. So let's talk a little bit about documentation and record keeping. As always, you want to keep detailed records. You want to maintain a travel log. There's always best practices for retaining this information, and no one wants to get on any one of the tax authorities' radar. So kind of what are some of the things you want to avoid? Keep detailed records. You need to keep your receipts, your invoices. Again, your credit card statement is not a primary source. It could be a secondary source, but your actual the receipt that you get from the hotel, the vendor, whomever, that's your primary source documentation. You can retain any of that information in any one of the digital apps. Again, it does not have to be in a paper format. I've mentioned it before on here. A lot of times the actual paper receipts do tend to degrade over time. So you probably want to capture it in some type of electronic format. You just want to make sure that when you are capturing it, you've captured it in a place that you can easily go back and grab it. Again, we use a number of products. You've heard me talk about it before. We use a product called Dext with our clients. We use another tool, Keeper, and Keeper has just added a receipt feature to it. So again, we've started to keep receipts for clients in that feature of the product. There are a lot of them, a lot of different ones out there. I could go over and over and over what each one of them are. But just remember, you want to retain them in a way that you can easily go back and find them should you need them. You want to maintain a travel log. Are you tracking your mileage? You want to know what date, what the date was that you traveled, where you were going, what was the purpose, right? I was traveling, I drove 100 miles because I was driving to a conference. Okay, the conference was April 1st and April 2nd. You need to keep track of all of that information. It's your responsibility to retain it in some type of log. Again, does not have to be in an electronic format. There are products which you can use that do that. It could still just be a little paper logbook if it's easier for you to track it that way, that still works. Track it in a way that you can easily find the information and pull it up should you need to do that. And again, the service, any one of the states is going to require you to have proof of that trip and what the primary business purpose was for that trip. Again, I drove 100 miles to meet client X on this day. I drove from here to here. That's the type of information that you want to keep when you are keeping and maintaining a travel log. A best practice for keeping your expenses, as always, we always talk about this. You need to have separate business and personal accounts. So, do you have a separate business credit card? Are you using a separate debit card for a business account to track your expenses? That is a helpful and easy way for you to track that information instead of commingling it into a personal account. So we always recommend that. We keep, again, most of our clients' expenses in, I call it kind of a ride-along software. Again, that's one of those extra app softwares. But then in the end, all of that information migrates into the client's accounting software. So it all lives together. So we have an expense in the client's software. Again, most of the products will have some type of little paperclip attachment. You can click on that and see the actual documentation that supports that expense. So again, basic best practices when it comes to tracking expenses that we've talked about before. It's very easily, it's something that you want to be doing across your business, but is incredibly important when it comes to things like travel and mileage that you want to keep track of, because those are the types of expenses that are very easily disallowed in any type of audit situation. I've personally seen it for clients that we've gone through audits. They just either didn't have the proper documentation, or it was flat out not a business related expense, and therefore it was disallowed because it was personal. Like anything else, you do not want to get on any one of the tax authorities' radar, right? Nobody wants to be, raising their hand. So, make sure that you're not trying to deduct all kinds of crazy personal expenses in your business. I've seen a lot over the years. Clients want to push the issue. The reality is you do not want to get on anyone's radar, because once you're on their radar once, there's a probability that, someone could come back around at another time. Maybe it's on the federal level the first time, the next time, 3, 4, 5 years later, it's on the state level. Again, no one wants to raise their hand in front of any of these authorities. So be mindful of all the expenses, the personal ones that you are trying to push off as business expenses, especially if you're really trying to push the issue. In many cases, the savings is not worth the overall expense that could potentially come across should you actually end up in an audit situation. It's quite expensive to be represented in front of the tax authorities. And then the adjustments can be even more expensive with penalties and interest. So sometimes trying to push personal expenses through your business as, as a business expense just doesn't make sense. Again, meals. Your business travel meals are not 100% deductible. They're only 50%. So that's a good way to, don't try and push the issue on that one. And then the last is, and again, I've seen it in my own personal experience, travel expenses that are disallowed in an audit situation because they just didn't have proper documentation. There was no real indication that it was business travel, may have actually been a personal trip. So again, you want to make sure that you have good documentation. So if you are claiming your business travel expenses, where are they? So again, if you're a sole proprietor, you're claiming them on your Schedule C somewhere. And if you're incorporated in some way, or if you're a pass-through entity, again, those are going to show up on your business returns as ordinary and necessary business expenses. So if you're a partnership, if you're a C Corp and S Corp, those are the kinds of, again, that's where they're going to appear on those actual business returns. They're not going to appear on your actual personal return. They're actually related to reducing the taxable income of the actual entity. I know that's a lot, and I know that travel is a very hot topic with a lot of people. So as always, reach out to your CPA or your enrolled agent if you are questioning the deductibility of your travel expenses. We want to make sure that you're getting all of the expenses that you should be and you're maximizing them to reduce your taxable income, but you do want to be careful that you're not pushing the envelope. So, have a conversation, have a 15, 20-minute conversation with the individual who's supporting the tax preparation part of your business or helping you with tax planning overall as to what really truly is deductible for you and your business, to make sure that, something is not disallowed, but you're also getting the maximum tax deductions to reduce your taxable income. I look forward to seeing you here every week. As always, we would love for you to join our Facebook group. So, follow the link below so that you can join us and get free information from us. We answer questions in there related to construction. And again, if you have a travel question, we'd love to hear from you. Drop it in the chat or join our Facebook group to have that question answered. I look forward to seeing you here every Friday. Have a wonderful weekend, and we'll see you next week.